Hello. One simple illustration covering only a single process is given. Say first you go through the problem. 1000 units of output are transferred from process A to process B at a cost of rupees 4 per unit. Normal loss in process B is 6% of the output and scrap value is rupees 2 per unit. Actual output of process B is 900 units. Other expenses in process B are material rupees 1000, wages 1200, overheads 2380, and you have been asked to prepare process B account and also abnormal loss or abnormal gain account. So by this time it seems this is the third problem we are looking into. At least you could have elicited a picture pertaining to the applicability of process costing. Now 1000 units of output are transferred from process A to process B. Now you open process B account. Having opened process B account is to be debited to process A account, because specifically given in the problem as 1000 units at a cost of rupees 4 per unit. At a cost of rupees 4 per unit, in the sense total amounting to rupees 4000. So thus process B account is debited at rupees 4000 and debit entry is concerned to process A account. Why process A account? Because half baked product already transferred from process A to process B. Then additional expenditure given in the problem. Other expenses in process B are, you go through, material rupees 1000. Now you debit process B account at rupees 1000 because it is the additional quantity of material fed into process B. Then wages, two wages, how much? 1200. Then two overheads, how much? 2380. Now it is specifically given in the problem that normal loss in process B is 6%. Normal loss in process B is 6% of the output. Output in the sense number of units transferred from A process to B process. Of number of units transferred from A process to B process, how much is the total number of units transferred? 1000. 6% of 1000, it works out to 60 units. And it has a realizable value, or it has fetched a scrap value of rupees 2 per unit. In the sense 6% of 1000 units works out to 60 units. You write it in the units column. Then realizable value of normal loss is rupees 2 per unit. At the rate of 2 per unit on 60 units, it works out to 120 units. Now actual output of process B is 900 units. In this problem, actual output from process B to be transferred to the next process. The information pertaining to next process is not given. You need not have to bother about it. Now the actual output of process B, it stood at 900 units. Now you arrive at inference. Total number of units fed into process B 1000 units. Out of this, permissible loss 60 units, in the sense either unavoidable loss or permissible loss, or also called as our normal loss. Then how many number of good units must be there? The total number of good units must be 1000 minus 60, that is 940 units. But in this problem, actual output of process B is how much? Say actual output of process B is given at 900 units. Now the question is, where went the balancing 40 units? Where went the balancing 40 units is concerned, definitely it is avoidable loss, or it is abnormal loss. It could have been avoided, but due to our negligence, we have lost total number of 40 units, because 1000 units fed into process B, permissible loss 60 units, 1000 minus 60, 940 units should have been there, but in reality the actual number of units stood at, or given in the problem as, 900 units. Therefore, where went the balancing for 40 units? The balancing 40 units, it is abnormal loss, that is it is avoidable loss. It is due to our carelessness, maybe it is due to our negligence. 40 units they have been lost. Now How about the ascertainment of the value of abnormal loss? For this purpose, in yesterday's problem itself, we have solved it. Now, you first ascertain the total cost incurred in process B, comprising of cost of raw material transferred from or half baked product transferred from process A to process B 4,000, then additional material introduced 1,000, wages 1,200, overheads 2,380, totaling to 8,580, totaling to rupees 8,580. Out of 8,580 being the actual process cost incurred in process B, say normal loss has fetched something. Say the total realizable value of normal loss, it stood at 120 rupees. When it stood at rupees 120, then now unit cost of abnormal loss is concerned actual cost minus realizable value of normal loss. In the sense, 8,580 minus 120. Now, 8,580 minus 120, 20. Now, 1,000 units fed into process B, your unavoidable loss 60. In the sense, good units must be 940. Therefore, 8,580 minus 120, say the resultant figure, it must be divided by 940 units. Why 940 units? Because in fact, the number of good units, it is bound to be 940. But in reality, it is 40 less than 940. Leave it apart. Say definitely, say unit cost you are going to arrive at. Now, multiplied by how many number of units of normal loss? Number of units of normal loss, it is rupees. Number of units of normal loss 40, and the amount is concerned, it works out to rupees 360. So thus the amount works out to rupees 360. Now you close process B account, debit side 1000 units 8,580. Now credit side also 1000 units 8,540. Now out of total number of units fed into process B, 1000 units, 60 units normal loss, 40 units abnormal loss, total number of units lost 100. Therefore, the number of units either transferred to finished stock account or to next process, it is bound to be 900. You go through the problem. Actual output of process B is 900 units. Definitely, at the rate of rupees 9 per unit, it works out to 8,100. Here also abnormal loss is concerned. Abnormal loss 8,580 minus 120 divided by 940, it works out to rupees 9 per unit. Rupees 9 per unit. 9 per unit into number of units of abnormal loss 40. Thus amount works out to 360. Say thus the value of abnormal loss per unit, it is arrived at rupees 9, and also the finished stock account is concerned at the rate of rupees 9 per unit to on 900 units rupees 8,100. Say thus, hope with this simple illustration you could very well get digested with the intricacy associated with your process costing. Now here deliberately I have taken this simple problem because one more account you have been asked to prepare, that is abnormal loss or abnormal gain account. Now so far as abnormal loss or abnormal gain account is concerned, you minutely go through process B account. Where abnormal loss appears? Abnormal loss appears on the credit side of process B account. Now, what about the journal entry? Journal entry is concerned abnormal loss account debtor to process B account, because in process B account it is written as by abnormal loss. Thus, abnormal loss account debtor to process B account. How much is the number of units? 40. How much is the monetary value? 360. Now accordingly, when you have opened abnormal loss account, you debit abnormal loss account as to process B account, because abnormal loss account debtor to process B account, in abnormal loss account process B account is to be debited, and accordingly abnormal loss account is to be debited under the caption to process B account 40 units rupees 360. Now An interesting point to be noted in this connection is that, say, value of normal loss, it must always have to be borne upon by good units produced. But anyhow, normal loss has fetched us a realizable value of or scrap value of rupees 2 per unit. Now, how many number of units of abnormal loss? Number of units of abnormal loss in this problem, it stood at or it is arrived at 40. Now, 40 units realizable value of your normal loss, it has to be given credit to. Definitely, at the rate of rupees 2 per unit in respect of abnormal loss of 40 units, 40 into 2, now it is to be credited in the sense cash account debtor to abnormal loss account. In abnormal loss account by cash, 40 units of abnormal loss at the rate of rupees 2 per unit, amount is concerned rupees 80, and the balancing figure, it must have to be transferred to costing profit and loss account. So far as amount to be transferred to costing profit and loss account is concerned, you cannot touch upon the units column, only monetary figure, or in amount column only, the balancing figure being rupees 280. Now, in the theoretical aspect which I have dictated, say you minutely go through it. Say the balancing amount of abnormal loss, it has to be transferred to costing profit and loss account. Specifically, it is being given. Say thus, this is about the methodology under which you have to open abnormal loss account. Similar would be the case pertaining to abnormal gain account also. So far as abnormal gain account is concerned, similar accounting treatment, but only the corresponding entries are concerned, they will go in for interchange. Say anyhow, with the help of one more example, tomorrow we shall prepare abnormal gain account. Thank you.